Assalamualaikum warahmatullahi wabarakatuh and good afternoon everyone. Uh, we are in week 10, so I'm going to discuss chapter 7 from the Loftus textbook that is on impairment of assets. Impairment of assets. So let us look at what are the things that we're going to cover. Yeah. Number one, I'm going to explain what is the nature and purpose of impairment test, how to conduct impairment test, what are the rule of the impairment test. Okay. Explain when an impairment test should be undertaken. Outline the component of the impairment test. Describe how to account for impairment loss for one single asset and also how to account for impairment loss for cash generating unit. If, for example, you have a collection of assets that work as a unit, so when we calculate the impairment, so how are we going to allocate the loss to each type of assets? Number six, explain when impairment loss can be reversed. Previously, you recorded as impairment loss. Maybe after a few years, you want to reverse the loss. There's no more loss. The value of asset increase. So how you're going to account for that? Now, and finally, identify the disclosure required in relation to the impairment of asset. So these are the things that I'm going to cover today. Okay, as introductions, the accounting profession, the professional body introduced an impairment test that entity apply to test the recoverability of their assets. We have recorded our assets, our PPE at maybe at a certain value at the carrying amounts, and the next step is we're going to test whether the recoverable amount is greater or lower than the carrying amount. So it involves a process where we normally calculate depreciations for the asset, and for the intangible asset we provide amortizations. Okay, that calculation is based on the estimated useful life or the and residual value of asset. We determine what is the depreciable amount of the assets and allocate that amount to the estimated useful life of the assets. So that is the normal process. So the asset can be measured at cost. We can measure the asset at cost. At the same time, we also can revalue the asset after the subsequent period, after the initial recognition. For example, you can revalue the asset outward, and sometimes we have to account for impairment loss if there is any reduce or loss in value of that assets. Okay, so that is the thing about valuation of assets. And always remember, every year, every month, we did provide depreciation for the tangible asset and amortization for intangible assets. So under para 6 of EASB 136, so this is the rule that governing impairment of asset. ASB 136 IAS number 36. It defined impairment loss as the amount by which the carrying amount of an asset or CGU, the CGU is a cash generating unit, combination of asset, exceed its recoverable amount. What does it mean? It means that the value, the carrying amount, your record, the carrying amount is greater than a recoverable amount. So in this situation, we're going to have impairment loss. Impairment loss. For example, your carrying amount is 10 million. This is based on your book, your record. This is 10 million. For example, maybe the PPE, 100 million minus 90 million. So the carrying amount is 10 million. But the recoverable amount is only maybe 6 million. So in that case, your carrying amount is greater than recoverable amount. So you have impairment loss of 4 million. So I'm going to show you some example on how we're going to calculate the impairment loss for the assets. So the impairment does not apply to all assets. Notable exclusion are inventory. We don't calculate impairment loss for inventory. Inventory normally follow the lower of cost and net realizable value of inventory, deferred tax asset, as well as non-current asset held for sale. This is non-current asset, for example, vehicles, maybe building, but this one is you're going to dispose these assets. You're going to dispose this asset. Going to dispose this asset in the near future. So this does not fall under impairment loss. Okay, so an impairment test is not necessarily undertaken at the end of each reporting period. Yeah, the general understanding is at the end of the financial period on 30th June or 31st December, we're going to conduct impairment test. No, the standard does not mention ask you to do it at the end of the accounting period, and it is undertaken when there is an indication, there is a signal, there is some information that an asset may be impaired. So it's not based on regular year-end activities, but once you have some signal, information, or indication that the value of asset has impaired, so you need to perform the impairment test. So the following asset must be tested annually for impairment regardless of whether there is an indication. However, for these three kind of assets, you need to do annual assessment, annual test to see whether the carrying amount is greater than the recoverable amount. That what kind of asset? Intangible assets. Yeah, with indefinite useful life. Intangible asset, not yet available for use, and also goodwill from business combination. So this item must be tested annually. These items must be tested annually. So what are the evidence? What are the indication that call for testing, yeah, call for evaluations of the value of assets, the carrying amount, and also the recoverable amount. There are many signals for that. It can come from the external source as well as internal source. Okay. So the evidence of impairment relates to variables that may support the belief that the book value of assets or the carrying amount of the asset now is overstated. Overstates, yeah. I'm talking about the carrying amount greater than recoverable amount. So the future cash flow expected to be generated from its use of sale. Sorry. So what are the external source? Maybe decline in market value. The property value drops significantly. Okay. Adverse change in entity or market environment. There is a bad economy. Yeah. So it affect the market. Increase in interest rate, borrowing rate. Yeah. Or the carrying amount of the net asset exceed the market capitalization. Yeah. The carrying amount mean the market capitalization is lower than the carrying amount, the CA, what you record. So these are example of evidence showing that there's impairment of assets. For internal use, for internal evidence, okay, as the user, as the owner of the assets, we know sometimes there is obsolescence or physical damage on the asset. If you have vehicles, your vehicles involved in accidents, yeah, so there must be loss in value of that assets. You cannot sell the car or the van at higher price because it involved, yeah, got into a crash, for example. So this is what called as physical damage or obsolescence, or adverse changes in the entity expected to affect the asset use. So anything bad happen to the asset, so it will reduce the value, the recoverable amount from that assets. For example, for the internal source, you can compare the economic performance of the asset. For example, the actual cash flow for maintenance, increase in maintenance cost, or actual cash flow inflow or profit may be lower than expected, and also that how much you are going to spend for the maintenance of that asset. So these are maybe increase in the maintenance cost for that assets. So how are we going to conduct impairment test? Number one, you are going to determine the recoverable amount. I call it RA. RA. Okay. This is your recoverable amount. How to determine a recoverable amount? You're going to check equal to the higher of between these two, which one is higher? Number one is the fair value, less cost of disposal. What is the fair value of that assets? That van minus the cost of disposal. If you sell that asset, sometimes you need to pay agent, yeah, the salesman. So how much is, or you need to bring that asset from one location to the, from your locations to the sales room. Or the sales office. So that is the cost. Say fair value less cost of disposal. For example, the value here is 10 million. And next one will be the value in use. If you use that asset, how much is the value? So for example, the value is 11 million. So between 10 and 11, which one is higher? 11. So I'm going to use this 11 million as my recoverable amount. Yeah. Okay. And number two, that is step number two. You know your recoverable amount is 11 million. And then this is 11 million. Yeah, you choose the higher. And then you're going to compare with the carrying amount. This comes from your book, from your accounts, from your ledger. What is the carrying amount of this asset? For example, the carrying amount of this asset is 13 million. 13 million. So if your recoverable amount is lower than your carrying amount, so an impairment loss has occurred. I repeat, if the recoverable amount is lesser than the carrying amount, the impairment loss has occurred. So in this example, your recoverable amount is 11 million, whereas the carrying amount is 13 million. So in this case, your recoverable amount is lower than the carrying amount. So there is impairment loss. How much is the impairment loss? 2 million. 2 million. The impairment loss is 2 million. Is 2 million. Okay. So this is a good example. What if the fair value of asset here is 12 million? So you need to choose the first step equal to the higher of fair value less cost of disposal and the value in use. So in this case, between these two value, 12 million is the higher value. So I'm going to put here 12 million. So I'm going to compare the recoverable amount 12 million with 13 million. So my impairment loss is 1 million. This is my impairment loss, 1 million. So let us look at the three components, yeah, of value here. Number one is fair value. What is fair value? The price that would be received to sell an asset in orderly transactions between the market participant at the measurement date. If you dispose the asset, you sell the asset to active market. You don't sell it orderly transaction. You don't sell it to your brother or sister. The real transactions, yeah. So what will be the value? So you're going to get the value, for example, maybe 11.5 million. Okay. And what is the cost of disposal the asset? Cost of selling the asset. You need to pay agent, for example, agent. you pay the agent, you pay the tax, you pay some charges there, maybe it costs you 0.5 million, 0.5 million. So the fair value less cost of disposal will be 11 million. So this is 11 million. Fair value minus cost of disposal of assets. Number three is the value in use. What is value in use? The present value of future cash flow expected to derive from an asset or cash generating unit. If you don't sell the asset, you keep the asset. Maybe the asset can last for 10 years. This is year zero. So every year, how much you can generate from using the asset. So you're going to use present value. This is what you did during your maths, your statistic class. So this is the present value. So this is the VIU, value in use. VIU, yeah, VIU. So now we need to compare between VIU and this is the VIU. Yeah, VIU and the fair value less cost of disposal. You compare this figure and you choose the higher value. Okay. Considering these three components, the recoverable amount of an asset or CGU, cash generating unit. What is CGU? A collection of assets that work as a unit. As a unit. Yeah, for example, I can see if you have airplanes, yeah, what are the assets involved? Number one might be the engines, maybe the cockpit, yeah, maybe the body, maybe the furnitures, maybe the fittings. So it acts as one unit, as one unit. So it fair value less cost of disposal. For example, this one is 11.5 minus 0.5. So this gives you 11 million. And the value in use, sorry, okay, this is 11 million, yeah. Sorry about that. This is 11 million. This might be 12 million. Okay. Okay. The value in use is 12 millions based on present value. Present. You can use PVIF or PVIFA, PVIF or PVIFA tables to help you to calculate what is the present value of cash inflow or the net cash inflow from use of assets in the future. Okay, so you need to compare these two, and this will end up with 12 millions.